Good afternoon. It's Matthew McCora with our event today on what I like to describe as the profit squeeze play. And essentially, I'm going to be walking you through a pattern that looks like the squeeze effect when you squeeze a balloon and then it goes pop, right? So it's really a combination of simple pattern recognition paired with easy to follow momentum. And the momentum we'll be using is volume, right? So I'm going to really talk a lot today about how volume impacts price action, and then not only just talk it through, but really just take you by the hand and walk you step by step on how to identify these breakout opportunities. So what we're going to do first is let's just make sure everything's working properly. I want to make sure we just do a simple audio video check. Some of you may not be as familiar with GoToWebinar as you may be with other webinar platforms. So we use a question section that's found inside of each and every one of your control panels, which looks just like what you see on the screen in front of you. This is a private chat box, and we do that intentionally to ensure that all of your information stays private. So if you can't hear me, just type a quick note and we'll move on. So I've got a couple of people already chatting, so I appreciate it. We've got the comments says live. Let's see, Darren says, yes, can hear and see your screen. All right, perfect. All right, good. So I won't spend too much time on this. So if you did respond, I do appreciate it. All it takes is one or two of you to respond, and at that point, we know everything is connected. I'm going to wish everyone a happy Thanksgiving if I forget to do so later. This is my favorite time of the year. I'm in Florida, so we don't get quite the weather change as found in other parts of the country. So here it's planning to be about 80 degrees. It always seems to be hot on Thanksgiving, but so just in case I forget, I want to wish you all a happy holiday season as well. Now, if you haven't seen me before, I'm just going to spend a moment introducing myself before we jump into the workshop here. I've been in the financial industry as a trader, coach, an executive, and at the time, it was one of the largest financial education and trading technology companies. Started with them back in 2007. Worked my way up in that group. They were the ones that taught me how to trade. So it came in green back in 07 and learned how to trade the Forex market. That's the first market I began trading. And if you know what the Forex market is, you know it's highly technical in nature as far as being able to read charts and perform technical analysis. So that's where I learned and earned my chops. And it was also, if you remember back to 2007, it was the Great Recession. So I got to learn in very similar conditions as we see today, and it's bringing me all the way back full circle to that prior experience. Now, some of the benefits of my experience really comes in the form of working with traders like yourselves from a retail perspective, individually as well as in group sessions like this, but then also my experience as the Chief Revenue Officer working with other trading experts and helping to create programs through systems, manual analysis, as well as software. And it was able to really pull a lot of concepts into a very simplistic strategy that I'm going to be giving to you today. One of the things I focus on is momentum and trend direction, which of course is the crucial part of trading, is understanding which direction we're anticipating the stock to go. So that way we can then, if we decide to, we can also trade options if we decide that that's a strategy we want to use. So what you're going to see today is a perspective on identifying first the stock we want to trade, which stock is best set up to break. And then from there, we have a simple plan of how to trade options. Now, this presentation, and if you've seen me before, then you already know that I like to go really deep into training and education. So I like to call this more of a workshop than anything else. I'm going to be giving everything up front to you as far as the exact strategy, how I set my charts up. And if you like what you see, you're going to be able to be taught this momentum strategy, which is the basis of the profit squeeze. Okay, so you're actually going to be able to walk away with the actual strategy, and usually by the end of this event, about an hour and 15 minutes, I would say 75% of you have a very high proficiency level of actually deploying the strategy for the profits squeeze. All right, so I just want to let you know a little bit about me, and if you have any questions at any point in time, please feel free to use that question section, and I will do my best to answer your question. Okay, so even though we're going to be highlighting and talking specifically about stocks and ETFs, especially when we talk about the S&P 500, the NASDAQ, things of that nature, the strategy I'm going to share with you can be used upon any chart of your choice, any type of investment vehicle that you decide to trade. You'll be able to deploy this very same strategy. Now, I do want to highlight this, and I have to highlight this, that trading in the financial markets does carry risk. So much so, in fact, that you could lose a trade, you can lose all the money that you put into a trading account. But this is something that you've seen in any event like this. This is a general disclaimer about risk involved, so make sure that you only use risk capital, please. Risk capital to me means that if you do lose, you can still keep food on your table and keep the roof over your head. But once again, this is something I must disclose to you. I think we're all on top of it enough to know what we're getting ourselves into in the financial markets. All right, so with that, we're going to jump right over into the charts. Now, I use TradingView. This is what you see on the screen in front of you. You can use the strategy I'm going to share with you on any platform of your choice. You do not have to pay for additional software. I am anti-expensive software. The only reason I have a paid subscription to this platform is because of the number of watch lists that I use. So, but if you are interested, you can go to tradingview.com and you can get a free account. And in fact, you can run the strategy I'm going to share with you today on that free account. Or if you have other charts that you're familiar with, nothing in which I share with you today is proprietary. It's really available across the board on almost every software that I've come across. You'll be able to deploy the exact strategy that I'm going to walk you through today. Right, so take that away. As my prior experience creating products, selling hundreds of millions of dollars in product throughout my entire career, we sold software, and we had expensive software that we sold that was $200 plus a month. And what I'm going to share with you today can replace all that good stuff. Right, but I think there is a place, and I think there is value in some of the software. I think of it as the 80-20 rule. But once again, this is the free software if you choose to use it. Now, I trade with TD Ameritrade, so I use the Thinkorswim platform. And if you like those charts, you can also use your broker charts as well. And I'm going to be sharing with you here in a moment a checklist that you could take a screenshot of. And then that way you can take it with you and use it to your heart's delight. Okay, so like I said, I'm going to share everything. This is more of a workshop than a classic event where you never really get to see the full use of the strategy. I'm going to give everything away, and if you have any questions, of course, please fire away. All right, so I've got a question. Other than Thinkorswim, what other platform are free with live data? Well, this is TradingView, so you can get free data here. TradingView.com. Sign up for a free account, and you can get access to all this pricing data on the software itself. And that is for Essentra. So what we're going to be utilizing, now I'm going to walk you through what I have on my chart and the exact setup here. But what we're going to do is we're going to identify a straightforward pattern, and all we're going to have to do is look up and down, which is vertical, to find a particular pattern that gives this squeeze and then breakout move. So on the screen in front of us, we've got the SPY, which is the symbol. It's the S&P 500. This is an ETF. Once again, this strategy that you see, all these indicators, I'm going to walk you through, but this is applicable off any type of market you want to trade. If it's stocks, ETFs, if you're trading futures, trading Forex, if you're trading cryptos even, you know, these tools covers all of those investment types. And it makes it nice because you don't have to learn 50 different ways to trade based on a specific market. Ultimately, I want you to walk away with this type of understanding. I'm going to pull up Occidental Petroleum Corp. Many of you may have heard about this starting really in March of 2022. This is Warren Buffett and Berkshire Hathaway started to heavily invest and buy into, where they become, I think they're at a 25% ownership, maybe 30% owner of Occidental Petroleum Corp. So essentially what I'm going to be walking you through today is this specific pattern here. Now I'm going all the way back to the beginning of 2022 here. And the reason I'm here is because I want you to see first what pattern we're going to recognize. And then I'm going to back into exactly how it all works, right? So number one, what you're seeing is 3 indicators of trend. I use the most simplistic and straightforward indicators to help provide speed and simplicity to your analysis. The first step of trading is understanding what the next direction is going to be. Are we going to be moving up or down? When trading options, if that's your choice to trade options, right, we have to worry about timing. We can't stay in an option trade forever, though you can roll over your option trades, right? It's just not the ideal place to be, right? So timing is very important. If we're looking at a buy and hold scenario where we're just buying stocks and building up a portfolio, trying to catch good buys, I mean, especially as of late, seeing mega cap companies in the 30% drawdown area, you know, like Apple down 30%, Amazon down, Google down, right? Building a portfolio, you know, you can get by with 3 or 4 days of buying at, you know, at the wrong time, as long as you can hold it in your account, right? Dealing with drawdown. But when you're trying to really get your timing down and maximize the trade, it's important to understand the relationship of where the ideal point is to get into a trade. So what I'm going to do is I'm going to go inverse and in reverse here and talk about what these trend lines are doing. Now I'm using 3 moving averages, and these are very simple moving averages. These are not your weighted moving averages or exponential, though you can use those. I'm going to keep it extremely simple. So the first indicator I'm going to talk about here is in red. I got rid of all the other indicators just so we could focus on this one to start. This is a 50-day moving average. Now I'm on a daily chart. So each one of these candlesticks represents 1 day in the market, gives us an open, high, low, and close price. So the 50 is a very common value to be used for trend. It's one of the most commonly used. For us, this type of setup that I'm giving you, this combination of moving averages, is designed for the swing trader in mind. So this means those that, for me, my definition of swing trading is being in a trade for days and weeks. My average hold time in a setup like this is around 3 weeks, meaning entry to exit, about 3 weeks is the average. Just to give you an idea, if you want shorter times, and I'll give you different formulas for short-term trading, you know, longer-term trading, where you're holding positions for weeks and months, there's a specific setup that I use for that. But ultimately, what this is doing is giving us a live rolling trend line. So what it does is simply calculates the last 50 days. So it's a rolling average. So every day that's going by, it's adding to the last 49 and giving us a trend. So this is a trend line. What this is going to do is replace the need for manual trend lines. Now, one of the issues with manually drawing trend lines is that it's subjective. You know, the simple fact that we say and describe trend lines as manually drawing trend lines, right? The keyword is drawing. That makes it a level of art involved, right? That brings a level of art, and art is subjective. So that's why I like to use formulaic or objective data points. So that way, it doesn't matter what side of the bed I woke up on, it doesn't matter what my skill level is for manually drawing. I can get a consistent method of identifying, is the market going up or is the market trending down? If it's trending down, I'm not gonna buy, right? I wanna get that moment where we have a shift from down to up. So we're gonna talk about primarily buy side, buying at a low and selling at a high. Though the strategy works the same in a breakout, in a bearish breakout, we're gonna keep it focused on the buy side. So when I look at Oxy, and this is back at the beginning of the year, the close price on a green bar, right, is above the open. So as I zoom in here, right, this is where we close at the end of the day on the 4th of January. I look down below and I see that we're above the 50-day average price here, right? That's what this red trend line represents. What we're going to use is this 50-day as our long-term trend. So this is a longer-term trend that we're going to be utilizing is a 50-day. And so all we're going to simply do is look to the relationship between where we are and where is the 50-day. If it's below us, then we're trending up. If it's above us, we're trending down. And what you're going to see as I scroll out is I want you to see how the market takes off at the point of reversal. So when we're going down and then we break that trend, you can see how we start to reverse direction. We break it down, we start to go back down again. Okay, we break above, we start going up again. This is the point of reversal that I want our focus on. The point of reversal is where we get the largest percentage move in the marketplace. We want to be catching the breakout, effectively the squeeze, where we get that moment of a break of resistance is really where you start to see the market take off. Now, you do see the market continue to rally, right? Continue to extend. But as you can see, when we scroll out again and you look to where we cross down, right? You can see that initial wave push out. You see the strength of that initial reversal point. That's where we want to be. This is the highest percentage chance to really capture the big move, the initial move in that market. Yeah, the 50 days at close. Yep, Roger. So the way I have it set is close price. To me, the close price is the most important price. You have the open, high, low, and close. Of those four, the close price, where that actually closed at the end of the period, is the most relevant. So it's at the close price. Now, when I introduce these other time frames, the 10 and 20 and 50, this combination specifically is something that I've time tested for well over 10 years at this point. This combination provides 3 layers of trend analysis, 3 layers of it. Now, to understand the moving averages in the relationship, remember the time. Okay, so this is 10. So in blue is the 10-day average. In yellow is the 20-day. So 10, 20, 50. The 50 is our long-term trend. The 20 is our inner trend line. And our 10-day is our short-term trend. So if I take away the 20 and the 50, you can see how closely the bars follow the 10-day, right? Because instead of looking at 50 days, we're just looking at 10. And so you get a lot more volatility to the trend, right? It goes up and down more frequently than a 50-day because more data, the smoother that average is. Now, these trend lines, any trend line that you use, are designed to give us support or resistance. Now, most people are familiar with horizontal or left to right support and resistance, where you've got highs and lows that create support resistance. But trend lines also do the same. So the 10-day here is our short-term trend. So it's really there to help confirm with support or resistance closest to the current price. And it reacts the same way as the 10-day or the 50-day, but it just happens a lot more frequently, right? So you can see us go below the 10. Anytime we're below the 10-day, that's acting as resistance. We go above the 10-day, then it acts as support. Now, when we combine them together, and I get rid of the price for a moment, the candlesticks, and you just look at the 10-day and the 50-day combined, you can see what happens with the crossovers as well, right? So when the 10 crosses down, you can see us continue to move downward. When it crosses back up, the same holds true, okay? So what we look for is we look for as many data points as possible to help set the next expectation, right? We're always trying to understand and answer the question, what is going to happen next? What is going to happen next, right? That's the goal of every trader, is to understand, is this going to go up or is this going to go down? So now when we add the 10-day, it's going to help us understand the level of support. So if we're talking about buy side, right, meaning buying at a lower price and selling it as the price goes up, understanding the relationship of not only the candlesticks crossing, but then also seeing how the 10-day helps support price, it's adding multiple dimensions. So when I now add back in the 20-day moving average, now we're getting another trend line to also build support or resistance. Now the 10, you could tell, gets a lot more volatility, the 20 less so, and then you have the 50-day is smooth versus the others, okay? So sequencing of how this looks is wildly important. Now the reason I'm going to show you this is because of this breakout opportunity that occurs. So I just want to show you once again, this is what we want to look for, is this breakout, this type of move. And remember, I highlighted this bar, but there's one more key here of the puzzle that I want to share. So I'm going to go back in time and I'm going to give the final step to confirming a potential breakout's about to happen. That next piece is volume. Now this is just a simple volume indicator with a moving average of 20. So same concept as the moving averages with the 10, 20, 50 trend pattern above. This is the average number of shares traded over 20 days. So volume is the number of shares. Once again, it's not the dollars and cents. Okay, so it's numbers of shares traded. Now, when I turn off the moving average below here, here's the column chart, and I like mine on a column. All we see is activity. So if I come to this bar here in the left, top left corner right here where my cursor is, you can see the actual trading activity. So on January 4th, beginning of 2022, 26.69 million shares were traded for Occidental. The day before, there was 15 million. Day before that, there was 8 million, 8.6. Volume by itself is just data. What we want to see is actionable data. And so by leveraging an average trend line, now we can understand where there's high activity, what I describe as a surge of trading activity, or low trading activity, right? So high, low. So high volume or low volume, they both tell a story. High volume, low volume, very valuable information. Is there a surge in a direction? Is there high activity or is there low activity? what you're going to be looking for, and don't worry about how to find these. Okay, I'm going to give you a powerful process to search the market automatically to find these moments of time. So you don't have to worry about looking over chart after chart after chart. It's not manual. In fact, I'm going to show you how to set up a screener so you can filter and find opportunities whenever you want to trade. But before we do that, let's make sure you understand how it works. We're looking at 2 steps. It's a 2-step approach. Number 1, we want to identify the pattern. So I'm going to break down the chart into 2 sections. You have pattern on top. So everything above volume on the chart itself is the pattern. Okay, so this is trend pattern. And then on the bottom, we have the momentum. So trend pattern up top, and then on the bottom is our momentum. So all we're going to be basically doing is aligning, ensuring that we have the right trend pattern up top and we have momentum. This is the secret. I mean, this is really the powerful approach here that you're going to see dramatically change your trading. Trend pattern, so down trend, uptrend, that flip. And the question, do we have momentum behind the trade? Take a look at this big spike of volume. The average, so in that top left box next to the volume 20, it says, has 2 numbers. It's in green, it says 26.69 million. And then in red or fuchsia, it says 13.3 million. So the average is on the right. So the average at this point in time was 13 million shares a day for Occidental. Okay, that's the average over the last 20 trading days. But then lo and behold, on Tuesday, 26 million hit the market. So that's double, 2 times, double the market. That's what I describe as a big surge, large surge of trading volume. That volume is what we want to see to create this type of explosive price action. All of this breakout that we saw on this rally here began by recognizing this vertical pattern. We found the reversal point on the pattern. We were going down to up, and we confirmed the momentum. Many of you may have heard the thought about follow the money. This is precisely how you follow the money. Retail traders like you and I, we the retail traders, at the peak back in 2020, the highest record amounts of retail activity, we contributed about 25 at the peak, maybe 27%, but that was some peak trading activity. The majority of the time, retail traders like you and I, again, only make up about 10% of the daily volume in the markets, sometimes way less than that. The reason that's important and relevant to understand is that we need to be where the money's traded. So to do so, all we need are some simple techniques and tools to identify where that trading action is. This type of breakout pattern occurs all throughout the entire market. What I want to do here is I want everyone in the room to give me one stock symbol of your choice, and I'm going to build a watch list, and I'm going to walk through this and have you identify and see how this applies on stocks of your choice. Okay, I just picked Occidental. It's something I trade often, but I want you all to give me a list, and I'll create a watch list right now, and we're going to go through it together, and you'll be able to see as I go back at those reversal points how that pattern I just showed on Oxy presents itself each and every time. So I'm going to build our list. Today is the 22nd. If you have more than one, that's fine too. Let's load them up. CVS, let's see, we got Qualcomm. I got Apple coming in. Ooh, AMD, I like that. Got Tesla, AQN, utility company. Let's do the New York Stock Exchange one. There you go. Let's see, we got Rocket. That's interesting. NIO, DraftKings. Man, I gotta scroll down. You guys are really pumping these in fast. Good. I could see you all. Yep. Essentially, I'm going to show you how to build the scanner in a moment. Yep. Upstart. I always find it interesting to see what you all are interested in. That's why I like doing these watch lists. Okay, we got Chevron. I'm with you on Chevron. We got Ford as well. Okay. All right, so let's start. If you got more you want to see, you can always type them in later. All right, so here's our watch list. Okay, so first thing we're going to do is we're going to pull up a chart, and I want you to tell me, are we in an uptrend or downtrend? Watch how quick this goes now. All we're looking at is a relationship between where that last price is versus the 50-day moving average. So CVS up or down? Okay, that's right, up. Right, we're above the 50-day. Qualcomm, uptrend. That is very close to a breakout. Apple, uptrend. AMD, very close to a secondary breakout here for AMD, but you see the trend, see the 50-day uptrend. What's Tesla? Downtrend. All right, here's the price, here's the 50-day. Algonquin, I like that name. Downtrend. Rocket, uptrend. NIO, downtrend. DraftKings, downtrend. Upstart, downtrend. Chevron, uptrend. Ford, uptrend. Okay, so everyone in the room should see the same thing. That's the power of a simplistic trend analysis. So we could deploy speed, right? It doesn't take us 5, 10, 15 minutes to sit there and draw all these trend lines manually. We have a very consistent approach. So let's talk about these reversal points. And I'm going to scroll out here. So we'll start with CVS on top. What I'm going to do is I'm going to go back here and show you the reversal point and show you the breakout pattern, okay, the squeeze where you have the down to up move, and then we wait for the volume, and that volume with the trend reversal is where you get the big reversal point. And it happens going up and down, okay? So I'll show you both sides here. So starting back here, we had this reversal point, and we're going to start with the downtrend, and I'm going to just go back in time for CVS. This looks like in March 2022. Remember, I said it works the same way going up as it does going down. So look at the reversal. We are trending up. Price closed, big bar closed below the 50-day moving average. Look down below. Is that a surge of volume? Look at this market break. So just from this initial surge point, okay, from this initial surge, stock drops 5% in just 6 days. Okay, so you had an extension, retracement, extension once again here. Okay, so 5-6% in 6 days. That's a fast break. Ultimately, kept going. Okay, let's go to the next reversal point. The reversal is when we close above. Now, here's where we get the first pattern. You see how we were trending down below the 50-day, and then we get a close above the 50-day. But look down below. No volume. We didn't have the momentum behind it. The thing about momentum is that it's conviction. Okay, you can talk the talk. You can have an opinion, but once you put your money in the market, right? Once you make a decision, and that's what buying and selling is, right? It's making a decision. That's walking the talk. Okay, that's actually taking action. That's why I like looking at momentum in the form of volume, because it's not subjective. It's not an opinion. Somebody actually bought it, and not just one person, but lots of people bought something. That's momentum. So whenever you have a pattern reversal, like shown here, where we close above after being in a downtrend, but we don't have the momentum behind it. That's what I describe as a bull trap. Okay, it's a pattern reversal, but it's not paired with volume. It's not combined with momentum behind it. And so ultimately that sets up a deeper move before the move goes up again. And so what we're waiting for is to confirm that we have volume in play at the reversal point. And you can see how it starts to build, and then you get the big rocket ship. Okay, understanding this moment in time allows us to avoid this sideways chop. So this requires patience. But once again, you're not staring at one chart over and over and over again. What happens is we're going to use, and I'm going to give you a formula for a search criteria, basically a filter setting that will pull up stocks in a particular pattern, such as this. So to get to the current price here, there's one piece of the puzzle, which is analyzing a current trade, right? So if I'm looking at this watch list, this is not a watch list that I put together. This is not, some of these I trade quite frequently, but this is your list. And what you're going to find is that not every stock is ready to break out, okay, at every point in time. So breaking down and analyzing a current chart, such as CVS that we're looking at, I know we're in an uptrend. But if I want to get a new trade today, like right now, I need to have a method to find stocks at a particular pattern. So when I come down here, and I talked about AMD here, and I said, oh wow, this is close to another secondary break. What you're going to find is that there's really two phases of a reversal breakout. The initial is the first time the market breaks. So first 50-day MA break is what I describe as the initial move. Okay, that's the initial phase, and it's shown on this bar. Okay, that's the first time, right? We're below, and then we have our initial move back up. But then you also have a secondary. Okay, the secondary move of the reversal stage is after the initial retracement. That's the secondary. Of these two scenarios, the initial reversal point or the secondary reversal, the secondary has the larger move. It's typically the largest move of these two. And it's very simple why. It's a simple reason why. Just think about this concept. When I buy something and I want to take profit, I have to sell. So when I buy something and sell something, there's selling that takes place. When there's more sellers and buyers, price retraces or pulls back, right? There's a dip in the price. Once people take that initial profit off, it also is buying time for other people to see the trading opportunity, and that's when you get another secondary surge of trading volume show up. That's what creates the secondary larger move in the market. Now, the secondary is also more conservative because you have more support built up. So for example here, when I go back to the initial breakout, all we have as support, meaning trend lines or support below the price, right now all we have is the 50-day moving average. The 10-day, which acts as support, is still below the 50-day. That's not helping us yet. The 20-day is also below the 50-day, and it's not helping us yet as support. So that's why the initial stage is typically shorter lived. And once we create a high, you start to see the retracement. That's what I'm describing as this retracement. But what's happened in this time of this initial breakout is you can start to see the 10-day has now come up above the 50. This is a built-in lag because it's 10 days, right? So we have a built-in lag, an intentional lag to build support underneath this price. Ultimately, now we have, after today, we also now have the 20-day moving average underneath us. So initially, we just had one support, which was the 50-day. But as the market rallied and then retraced, as it's doing right now, now we have enough time for the 10-day to catch up and the 20-day to come above. So what do you think is missing? All we're waiting for here for AMD to be a go moment, a buy moment, is we want to confirm that the bulls are going to show up. So with the low volume today, remember there's high volume, low volume, and they're both important lessons. So with the low volume of the last couple of days, this retracement seems to be on its end. Okay, so the momentum to pull back here has now faded. So the next big bullish bar with volume that shows up is the go moment for AMD. Because as I go back, and I'll show you these initials, okay, you can start to see the flow of these initials and secondaries show up and rally, okay? So we'll go to another one here, but I'm gonna say AMD is really close to the secondary move, which is historically the larger move, okay? To give an idea, this move initially to the high came up to a high price of about 15, almost 16% from that high up towards the last high that I've highlighted here, okay? This secondary move is typically gonna at least double that, okay? So you're talking about a potential 30% surge if volume shows up. Volume needs to show up. That's our sign to go. Next volume bar that appears. So to find these opportunities when we want to trade, we need to have the moment of that reversal. You see, as I look at this list, we want to try to get as close to that initial reversal point, the latest reversal, as possible. So that way we can catch the largest percentage breakout move. CVS is the same story as I walk through on AMD, right? Here's the initial move. This is the retracement. Now we're looking and waiting for the next volume to show up below. That next volume that shows up would be the secondary move, okay? We go to something like Qualcomm. This is also, here's the initial. See the volume below it? All you have to do is look vertically. See the reversal point, look down below. Are we above that trend line on volume? We are. Here's that initial retracement. Now we're waiting for the volume to show. When that volume shows up here, that's the time to catch this breakout. Tesla is actively extending down. To me, this is in an active extension. I don't want to chase an active extension. So this, we have to wait for the retracement. It's a downtrend, so that means we have to wait for the retracement to come up. We get the sell, then we go back down again. Okay, that's chasing. Same thing for Algonquin here. See how far, this is an extension. We haven't even retraced yet. So I'm waiting for the market to set up. Rocket is close. Here's the initial move. Here's that initial retracement. What we're waiting for now is the bulls. If they show up here with volume, that's going to be the go moment. The reason I'm highlighting this is because if you just focus on a handful of stocks, you're either over trading that stock and you're not maximizing your investment because you're over trading a particular symbol. When I scroll out for this stock symbol NIO and you look at the reversals, this is since, I'll scroll out and put a lot more data here for you. So let's just look at the last 12 months. This is the last 12 months on the screen. So there's one reversal, two reversals, three reversals. We'll say four here. So four reversals, meaning going up to down in the entire year. Now, even though you could trade these retracements inside of here, okay, remember, we're trying to find the largest percentage probable move, and that is found at the initial reversal point. That's 4 times over 12 months. So if you go back and look at your trading statements now, look to see how many unique stock symbols have you traded in the last 12 months. The average retail trader ends up trading about 12 to 15 unique stock symbols in a year. In my P&L statement, you're going to see a unique rate, meaning unique stock symbol in 12 months, by 90%. 90% unique individual stocks and options traded. That means 90% of the time I trade a different stock symbol. And the reason why is because of this. What I'm talking about is being able to catch and identify the highest percentage moves means we've got to open up our portfolio and our search criteria to focus in on the opportune time and moment, not necessarily the individual stock itself. So to do that, what I'm going to give you and share with you all is one of the 4 main search criteria, aka stock screener setups that I use. And I'm going to give you the actual checklist so you can take it home and use it for yourself. But this is an aggressive bullish breakout checklist. Okay, that's what the strategy is. So the filter settings are quite dynamic, and you don't have to use TradingView stock screener. You can run this screener on Thinkorswim, on bar charts. I mean, there's so many free screeners out there that you do not need to have a paid screener service that you pay, you know, $20, $30, $40, $50, $100 a month for. Now, let me explain what we're looking for. Okay, so this is search criteria. So that way I'm not sitting here having to analyze and monitor and track dozens and dozens of stocks. I leverage this criteria to do the heavy lifting for me, and all I do is select what type of trade I want to take. Okay, so this does 80% of the work for us. So what we have here is we have 8 filters. Symbol type, I'm telling TradingView to give me common stocks, and I'll also look at depository receipts. Those are just types of stocks. I just want symbols in the New York Stock Exchange, NASDAQ. Okay, that's what these are. Now I'm looking at liquidity. So I'm focusing on small cap stocks or higher. So $200 million of a market cap is the definition of a small cap. Okay, that's the minimum small cap definition. And then over 2 trillion is basically everything small cap, mid cap, large cap, mega cap. Okay, so, but I don't want to trade anything smaller than 200 million as a market cap. That's liquidity. The next things I have is also liquidity focused, volume. What this volume is once again the number of shares traded. So I'm focusing my attention on stocks that trade 1 million shares a day or more. Okay, so I want to be able to buy at a specific price. I want to sell at a specific price. That takes liquidity. So this gets rid of all those small, micro cap stocks, low volume stocks that get manipulated quite easily. I want to set high bars of liquidity. Okay. The next thing I want to do is I want to show a sustained liquidity by using an average volume. Okay, so this is a 60-day average volume. So to show up in the list, and this list is updated every day. Okay, a stock to show up or a symbol that shows up, they must average 1 million shares a day. So this first volume filter is volume today. This is an average volume. That's what the 60-day represents, is the 60-day average volume of 1 million shares or more. This gets rid of, once again, all the small stuff. The next filter set here is relative volume. What this gives us is momentum. That's momentum. Relative volume is a formula that measures the daily activity today versus the average. So when I have above or equal to 1, that means I want to only see stocks that traded at or above their average trading range. Okay, so if they're trading volume and they average, let's say 5 million shares a day is their average, then they must have traded 5 million shares or more today. If they average 2.5 million today, they must have traded over that 2.5 million to show up. Remember, I want to try to find that breakout of momentum. So I want to see a surge. This is momentum. Now, the next two filters are based on pattern. So I want to see a positive change. These are buys. Okay, so aggressive bullish breakout means I'm looking for buys. I want to buy. So I want to buy off a green bar, right? To have a green bar, that means price has to be up against the previous day. So that's what this is giving me, is a pattern where I've got a bullish price move on the day above 0%. Okay, the next filter, the final filter, is also a pattern filter. So this is price crossing up on the 50-day moving average. So all in one filter, I'm filtering based on liquidity. I'm also filtering on momentum and pattern, all in this filter setting. This is doing the work for us. We don't have to look at all these charts, manually do anything. We are going to get a list that meets this criteria. Each one of these is a filter, so it has to check the box. For it to be in the list, all 8 of these must be checked off. It's not an or statement, it's an and statement. So here's today's list. We have 15 matches. That means 15 symbols match the criteria I asked for. So let's go to the first one. This is PXD. This is a phenomenal high dividend payout stock to LP, if you know what that is. Look at the pattern above. Let me hide some of this analysis. You see us crossing back above this 50-day, right? So we rallied up, came back down, crossed back up again. See the volume? We hit our volume for the day. Let's go to the next one. Remember, it's about finding and being prepared for the opportunity. See this crossing up with volume? There's Dick's Sporting Goods. I had earnings today. Look at that volume spike. Look at that reversal back up again. You can see additional analysis on some of these because they show up in my list before. Look at Tyson Foods. See this cross? See the volume? EQT. This list is at an actionable point in time to set trades up. Southwestern Energy, look at that break, volume spike. Playa Hotels, this is a secondary breakout opportunity. Look at this spike today. Initial retracement, boom. We've got a big green, but look at that volume, almost 4 million shares, and the average is 1.2 million. Now, to appreciate the 15 in the search criteria, there's 7,200 common stocks, 7,200 common stocks, and this criteria searched through all of them in seconds and gave us a focused list of 15. And this is just one of 4 search criteria that I use, okay? But this allows you to find pattern and momentum-based trades without manually searching and looking at dozens and dozens of charts, over trading a single chart over and over again, and focus on the pattern and the moment of time to actually take advantage of reversal points. Once again, if you go back to what is this, CFN Industries, look at the initial reversal, big bullish bar, okay, volume. Probabilities, right? We're focused on probabilities. That's what trading is about. Now, I teach a dynamic way to leverage even more insight using the 10 and 20 moving averages more than what I'm explaining here. And once again, I want to make sure you understand and are able to walk away with actionable intel and actionable tools. You could take a screenshot here if you'd like. There's a camera button. So if you get off of full screen mode and go to webinar, just hit escape. You'll see on the viewing window, there's a camera. So in that camera, when you click it, it'll take a screenshot of whatever I have on the screen, whatever's in front of us. So that way you can take it home with you and it'll save a screenshot to your desktop. And that way you have it. So the next question, what's the next question you think you have here, right? Is, well, how do I trade it? Okay, I see it, I can search for it. Now what do I do with it? Hopefully that's what your question is, because it's one thing to find it, right? Because when you think about trading, I like to think about it in terms of answering these 3 questions. What are we going to trade? When do we trade it? And then how do we trade it, right? So what we're going to trade is we're going to be trading breakout opportunities, okay? So the what is set up by this criteria here. So this answers the question, what? This gives us the list of what to trade. Now the when is the momentum setup. So what I'm going to do is share with you a strategy of entering and exiting using a specific type of order in your trading accounts. It's not proprietary to Thinkorswim or to TD Ameritrade. That's who I use. These are commonly used entry strategies, commonly available, but just not often used, okay, until now, hopefully with you. So understanding how to manage the trade is the forefront of this next level of exercise. If there's any questions on this filter set, once again, feel free to let me know. So the objective now, okay, is to identify the best place to catch these moves. Okay, so we're going to start and we'll look at Dick's Sporting Goods here. Let's do something else that does not have earnings. I don't want extra help. Okay, I don't need any extra help. Now, Dick's is definitely set up well, but I don't want to use earnings as the breakout because odds are it's going to break out fast. I want to show you something that does not have earnings underneath it to help it. I don't need a bonus help. I'm going to show you something that's more typical and more classic to what we're doing. Okay, so let's look at this EQT. Now I'm going to show you both sides, a stock trade and then an option side. How many of you trade options? Type in me if you trade options. If there's no one that trades options, then I won't do the option side. But if you do trade options, I'm going to give you a very simple process. Okay, wow. I had a good feeling a lot of you trade options. Okay, lots of you. Okay. All right, so ultimately, this is the latest bar we have. Okay, there's nothing to the right. You can see the date on the bottom. So we have the essential components of a upcoming breakout, right? We had the initial move happen back here. See this initial shift up? We were trending down. We flipped up. This is our initial retracement, and then we came back above, okay? This is a secondary entry, secondary breakout entry. So the concept I'm going to talk about initially is focusing on the stock pattern here first. This stock pattern of setting an entry, setting a stop loss, setting a profit target is also what we'll use to manage the option trade. So I don't go down to the option until I have everything set up. So everything needs to be set up on the option and on the stock, and then I'll go down and set up the underlying option or the derivative, which is the option trade. Okay, so all my work is always done first on the stock, and then I'll use this to get my profit target, stop loss, and entry for the option. Okay, so either way, we always got to start with the stock. So what we're going to do is I'm going to use a simple method, and as I draw it up here, I'm going to explain it. So what I do is I trade at the market after the market's closed. So right now at 5 o'clock, I'm in Florida. So right now at 5 o'clock is where I spend the majority of my time trading. So I use the same approach that I just shared with you now, right? I pull up the list and I start looking at the different lists of stocks. Every pattern is different. Even though I have a list of 15, some of those are better apt for a larger move than the others. And I'll explain some of that thought here as I walk through the profit targets. So because I have 15 down here on my list, like I said, not all 15 of these are created equally. There's a level of choice to this list of 15. Now today it's a low number, 15, and a lot of that is due to the seasonality of this week, right? We have Thanksgiving on Thursday, and then we only have a half a day on Friday. So today and yesterday, in fact, were low volume days, which is, you know, typical. Tomorrow is when volume usually picks up for the week. So the day before, which is tomorrow, Wednesday, and then even Friday, we have lots of volume, even on a half a day, right? So really this week, historically, Thanksgiving week, the volume is really made up between the day before Thanksgiving and the day after. So it's really set up for a good potential breakout tomorrow because of that. But the reason we only have 15 is, once again, because there's low volume around the board today. When the volume's high on a day, you could see 50, 60, 70, 80 or more stocks in this list, because momentum, when it's there, really creates a lot of price action, a lot of reversals. And so when you see that, you could weed through a ton of them. Now there's no price limitations here. So there's some $2 stocks, dollar stocks, you know, $6 stocks. Doesn't mean they're bad. It just, you know, just know that those numbers are in there. Then you also have stocks that are like PXD, that's $200 a stock. Okay, so you'll be able to self-select as you learn more about how to strat. And today's not the only day. Just to let you know, the offer to join my club and to continuously learn this and trade in this method I'm sharing with you is a very simple approach. It's called the Market Pro Live Club. It's a live session I host twice a week, every week. And I analyze, we trade, and we go over the market every single week. And I also send out trading signals, which are trades that fit this criteria. I send them out, stocks and options. All right, so you don't have to master this today. So coming back here, the first method here, knowing that it's evening time, it's 5 o'clock, market's been closed for an hour. Everything I set up today is not for today, it's for tomorrow. Okay, so the method and the mindset is catch, not chase. So we're not going to chase, we're going to catch. So we're literally going to set up orders in advance of tomorrow's market. So when the market opens tomorrow, we're already there waiting for the market to open, and our order is sitting there ready to execute for us. We don't have to sit there and babysit it. We don't have to hit the go button. We'll have it set up in advance of the market. That's the catch method. So what I do is we use a entry strategy where we find the bar high. So today's high was $44.59. What we want to do is we want to sit one tick above that bar high. We want to just sit right on top of that bar. And this creates our pending entry order. So this is our pending. I'm going to add pending just so we can have the right mindset. This is our pending entry order because we're going to set it up tonight in advance of tomorrow. Now, the reason we want to be one tick above this is because we want to catch a breakout. Well, what's a bullish breakout? Well, a bullish breakout is the market going up. So the market and the price needs to go up to confirm the breakout. All right, so price needs to go higher to trigger the trade for us. It's our final step, and it's our insurance policy that if the market retraces before it goes up, we're not into it. We're not going to buy into the retracement. So we're going to sit above it to catch it coming up. And it's done automatically based on the order type that we use. So we don't have to sit there once again and hit the go button. So one tick above the bar high. Now I'm going to show you this checklist. So you don't have to memorize it, but I'm going to talk it through first, and then I'll show the actual checklist to you. Now, the next thing we have to do is we have to set a protective stop loss. I trade with stop losses on every single trade without exception. And the reason is so I can maintain my objectivity even when I'm open and live. So even as I have a P&L, meaning I'm winning money, losing money, right? It's unrealized because it's open, but I don't want to have any sense of emotions dictating my trades. So the simplistic way that we're going to use a stop loss is we're just going to look at the recent patterns. So ultimately at this point, what I'm going to do is I'm going to leverage the trend line that's farthest away from us as our stop loss. So I'm going to find and use the trend line. In this instance, it's the 20-day moving average. You can see it below, and the farthest below our latest price, right? So here's our last price. Here's our trend below. Now I teach 3 different ways to use stop losses, but I'm just going to use this one to keep it simple today. So what I do is I find what the 20-day average is. Well, it's $41.51. I can see that in the top left box. Okay, so what I'm going to do now is simply set my stop loss one tick below that. So I'm going to come in here and I'm going to set up 41.50 is where I'm going to put my protective stop loss. And I use the same stop loss on the option trade. So I'll trigger the entry on an option same way as I'm setting up the stock. Now the next thing we're going to do is we're going to pinpoint the profit target where we're going to exit this trade. So once again, I teach 2 different ways to pick a stop, but we're going to use a simple one today. And what we do is we go back and find the latest highs. Okay, so we're looking for a high higher than our current, right? So I'm not going to put a profit target obviously below us, and I want to have at least 5% minimum of opportunity to the profit target, and I'll explain why 5% in a moment. So I'm just going to simply highlight the last 2 highs. So here's a high, there's my initial profit target, and I'll find the second high above that, which is up here. So now what I've got is 2 profit targets. Now, on a stock trade, there's a ton of flexibility in managing trades with a 2 profit target approach, as you see here. Ton of flexibility that I walk through and teach on how to maximize each and every trade that you take. When there's multiple profit targets, we're able to peel off profit, right? It's very rare somebody trades 1 share, right? You know, it's not typical to buy 1 share of a stock, right? You're buying multiple shares, you know, 5, 10, 15, 20 or more. So rather than being an all or nothing trader, what we can do is pinpoint and leverage money management strategies where we can peel off profits and get to a point where we're guaranteed profits on trades. Okay, so I'll explain that in a few minutes. So this is the setup that I walk through when I'm identifying and looking for trading opportunities. So I find the entry, okay, it's 1 tick above the bar high, identify a stop loss, and then I go back and I find the latest and most recent highs to target to. So now we have a structure to the trade. I know exactly what is in front of us. I know exactly where I anticipate any type of support or resistance, all laid out in front of me. So everything's laid out to the T, okay? As this trade goes, so if this trade triggers our trade tomorrow, okay, as this goes and extends and retraces and extends and retraces, what I'll do is I'll then find the next low and I'll just move my stop loss up so I can follow up that trade. I don't just do it randomly. I don't just pick a stop loss. I'll simply find the next low and then I'll move my stop loss one tick below that low, let the trade fulfill itself until I hit my second profit target. So for me, I'm a 50-50 profit target trader. So I'll take half off of the first target. When I hit the first target, I'll then move my stop loss to break even. Moving the break even, if I took off half my profit, half my trade off at the first target, I lock in that profit. Can't take it away. I've already booked it into my account. Then the remaining half of my position, my stop loss is at break even. So if this does reverse and come back down again, my second half is even. Okay, so I don't lose anything on the second half. I made profit on my first half, right? That's a guaranteed profit model. And then eventually, either I get stopped out or we hit the profit target. Okay, the second one. And this is a stock setup. On an option, I just use one target. Just one target. Yeah, you'll get a recording of this. Yep. So now we have it set up. How do we set the trade? Okay, well, at this point, I'm going to be pulling up our tracking account. This is what we track all of our trades with. This is Thinkorswim. You don't need to have Thinkorswim or TD Ameritrade to trade this process I'm going to share with you. You can use your broker of choice. So I'm going to pull up EQT. Okay, we're not going to trade the option yet. I'm going to trade it in a second. So all I need to have is the underlying stock above us, right? So what we're going to use is a OCO order. One cancels the other. Effectively, what it does is allows us to set up this trade all up front. So I'm going to set my entry up. I'm going to attach a stop loss to it, and I'm going to attach the first profit target to it, all in one ticket. This way, I don't have to manage it manually. I have protective orders in place on both sides at all times. I never trade without a stop loss or a profit target. I always have two exits on every trade, so that way I can be as unbiased as possible. I don't want any emotions involved when I'm in a P&L statement. So we simply go to the ask, okay? So we're gonna be buying. And on this platform, if you have this platform, you go to buy custom. If you have Schwab, Charles Schwab, Fidelity, or any other, Tastyworks, any other platform, this order type is gonna be there. It's just gonna be in a different spot, of course. So you wanna find an OCO bracket. And a bracket means we're gonna have orders above and below our entry, okay? That's what a bracket is. One cancels the other means whatever happens first. So if the profit target gets hit, the stop loss will cancel out. If the stop loss gets hit, then the profit target will cancel. That's the one cancels the other, okay? Whatever happens first. So we're gonna use an example of buying 10 shares, okay? So the first thing we're gonna do is we're gonna set our entry order up. So to set the entry, you just need to understand some vocabulary around order types. So what I'm going to do is I'm going to tell my broker that I only want to buy EQT if it marks at 44.60 or higher. 44.60 or higher. I want to set that as my entry. I'm not trying to buy it lower. I'm not trying to buy it cheaper. I want to buy it only if I get a breakout. So it has to either gap this and be higher than 44.60 or hit 44.60. I'm not interested in trying to buy it where it is now because I haven't yet broken out. I want to catch the breakout. So I've got to make sure I've got an order that sits above the price and not just execute me below it. So if I have a limit order tells your broker you want to buy it at that price or better. Okay, better means lower. I don't want to buy it lower, right? I want to set a very specific entry. So I use a stop limit, which means I'm only going to buy it at $44.60. Okay, that's my trigger point. That's the price that I want to buy. I'm trying to catch the breakout. So all I do is I simply put 44.60 in both boxes. The limit is the floor, the stop is the ceiling. Okay, so I'm setting a floor price and a ceiling price in one ticket. Now the time is just for the day. I want to catch the breakout, but the breakout must happen tomorrow. And the reason why that's important is because if this retraces tomorrow, it changes the pattern. I don't want to buy a retracement, I want to buy an extension. So by setting it for the day, I'm evaluating this trade based on what happened today. The pattern is a daily chart. I'm looking to catch a breakout in the next day. So if this does not hit 44.60 tomorrow, this trade will cancel at the end of the day. It has to hit 44.60 tomorrow. If it doesn't hit tomorrow, then the trade cancels automatically. This is where we really become hands-free. So the green is the entry order. The two red orders are my exits. Okay, those are closing orders. Those are your sell orders. I buy to open, I sell to close. So the next thing I'm going to do is I'm going to set my profit target. The first profit target. So I'm going to use a 50-50 model. So that means I'm going to take 50% off at the first target, and I'm going to leave the second target for the remaining half. So if we hit both targets, I'm going to capitalize on both targets. Okay, so 50% off here, 50% off there, then I'm out of the trade. I teach other dynamic ways, but let's keep it simple with just this two-step method. So on the profit target, I'm going to set the order to close half, right? So if I'm buying 10, I'm going to sell the other half. Okay, so that's 5, right? So I'm going to set now my profit target, and I'm going to simply go back to the chart and pull it. So $48.07 is my exit on the profit, right? So I'm just going to type in 48.07 below. Now the time frame, I'm going to leave my exits good till close. That's what GTC represents. I want it there to manage the trade until it's over. That's what GTC represents, okay? Next order is going to be the stop loss. So the stop loss at this stage, I want to exit all 10 shares at my stop loss. I don't want to leave anything out there. This comes down and stops me out. I don't want to be in it anymore. I'm going to cut my loss and move on. So my stop loss is now $41.50. So now I just simply type in $41.50. Same thing here, good till close. So now I've got both sides of it. So this is what the ticket looks like. So this is all in one ticket. They're connected. So order number one, I'm going to buy 10 shares of EQT Corp only at $44.60. That's what this is saying. That's my execution or trigger is $44.60. Order number two is my profit target. This is good till close. And then I have order three is my stop loss. So I have 2 exits, 1 entry. The exits, order number 2, order number 3, are going to be open until either one of those are hit. Fully protected trade. There's nothing left to guess. I don't have to sit there and manage this tomorrow. In fact, once I set this up and hit send, at this point, the trade is fully protected. I don't have to worry about any risk to missing the trade or getting stopped out, gapped out. Everything is set to protect it. So now what happens is it becomes a working order, right? You can see here, this is my working order section. And here is the EQT trade we just set up. What you'll notice, it says working. So it's available now for tomorrow. It's working. Now, you'll also notice that the 2 exits below says waiting to trigger. So the exits aren't working because the trade hasn't triggered yet. If you look down below, you'll see all these other working orders. In fact, there's 29 working orders. Reason why is because I have all of these open positions, and all of these, they're in pairs. So I've got a Pfizer option trade with a stop loss and a profit target. That's why it says waiting conditionally. You can see them waiting conditionally, right? That means the trade is live and I've got my exits protecting my trades, both sides of it. This is truly a hands-free approach and an objective way to really cut the ties of staring at your charts and building up all of this emotional baggage as you monitor each and every trade. Now, good questions coming in. So the question is, well, you only have half here. What about the other half? To keep things simple, we have one set on the initial trade itself, which is right here. Okay, this from target one and our stop loss, that's the first set. Once if the profit target gets hit here, your stop loss goes away. So we then have to come back and set up the second leg. So just think about this as a two-step trading approach. If this gets hit, we've got to then set our secondary trade up because this stop loss will go away. You'll book in your 50% of your trade at the first target, and now you've got a naked trade. So all you do at that point, obviously we're talking about the future at this stage, you would then move your stop loss. So you go to your open trade. So this trade, EQT, would then be active. So it would be on my Thinkorswim, it'll look like this, you know, so we have like an Oxy trade. See how it's just sitting here, right? You'd come in here once your first target's hit, and then you'd set up your bracket, your second bracket. So you have to have two brackets, but we can't set the second one up until we get this trade fulfilled, okay? At that point, you're gonna move your stop loss to your break-even price, and then you'll come in and put your second profit target up at the 51.97. Yep, so we'll set it on the second one. Yep, 100%. I don't want to make this too confusing. You can do it all in one ticket, but next thing your ticket's going to be like 5. I just want to do a complex one to start, but you'd have 5 orders attached to one. So you could do it in one ticket, but once again, it's a little complex. Plus, it's a nice time to celebrate and go, oh man, I got to protect my trade because I just hit my target, right? But that's the two-step, and you'll know you hit your profit target because you'll hear your bell ring, right? Now, this same approach that we just did is the same exact approach we'll use to set up the option trade. We've already done the work, right? We already know what the entry is. We already know what the profit target is, and we also know what a stop loss is. This criteria that I'm sharing with you now is found in this checklist. So this is the aggressive bullish breakout checklist. So remember, all the criteria is down here. What we're going to do next, so here's our trade setup, right? One tick above the candle high, stop loss, profit targets. This is what we're going to use down here to set up the option trade. Now, I trade, the majority of the time, I'm trading in single leg options. So I'm buying calls, buying puts. Now, with the education that I teach in my Market Pro Live session, I also teach various strategies of option trading, but for today, we're going to leverage straight call, so buying a long call. And all we're going to do is follow this 4-step checklist. We've already found the underlying stock, right? Options are a derivative of the stock, the underlying stock. So if the underlying stock goes up, then the premium goes up. Okay, that's what we're using this 4-step checklist to do, is to take advantage of the leverage of trading options. There's 4 steps. Delta criteria of 65 to 75 puts us in the money. So 70% of the time, I'm in the money on my option. So I'm already in a strike that's in the money, okay? So it's conservative. Open interest, greater than 100, that's liquidity. So same type of thought process as the stock filter screener. Delta is in the money options, okay? That forces us to be in the money. So that's known as ITM. That's going to be strikes lower than the last price of the underlying stock. That's what in the money means. Open interest is liquidity. Volume for stocks, open interest for options. Expiration selection allows us to take advantage of the swing. So 45 days to 90 days is our ideal expiration time. Remember, on the underlying stock, the average hold time is about 3 weeks using the 10, 20, 50 model. Now, some trades go 30 days, 35 days, some trades go 1 day. So this allows a buffer of time so we don't get up against theta. And then the spread, less than 10%, make sure that we don't overpay on our option chain. 4 steps. Less you know, the more you know about option trading. So coming back to EQT, now we're going to open up the option chains. So here's the option chains. This is for EQT. So 45 days is the minimum. December is 24 days away, so I'm going to get rid of December. It's too close. We got to let this thing swing. So now we're down to January, and I'm doing monthly. You can do weekly if you choose to, but we're going to stick this to monthly expirations. So that puts us out in January. Now, liquidity is defined with open interest when trading options. So this is the open interest column, and the minimum I want to see is 100. The more, the merrier. But I'm ideally looking for a lot of liquidity, and that's what I use open interest for. So we're looking at a delta 65 to 75. So that's putting us down at the $41 strike price. So remember the criteria: 65, 75 delta, over 100 open interest. We want a spread, the difference between the bid and the ask, less than 10%. And then we need buffer of time. So we've got the time issue. We're going to go out to January. The spread is 30 cents. Okay, so 30 cents between these two. $5.70, right? 10% would be 57 cents. So we're below the 10% threshold. And we've got 400 open interest, so we hit the 100. Okay, so at this stage, we're now set to set up this entry. Same exact process by using pending entry, profit target, and stop loss. Same exact process, but we're going to make the option trigger off the underlying stock. So that way we have the same hands-free approach, a one-time setup, as we just did with the underlying stock itself. So same thing, I'm going to come to the ask, buy custom. I want to find the OCO bracket. Now on an option, we have to worry about time. So I'm not going to set 2 profit targets. I'm going to, on the option trade, we're going to exit 100% on the first target. So stock-wise, I like to use a 50-50 model on an option trade because of time and expiration. I want to just take it all up at the first target. Okay, so 100% exit. So same thing, I've got my 3 orders, but I've got to customize my order. I'm going to make a contingent order. So instead of messing around down here, what I'm going to do is I'm going to come into this gearbox. Now, if you don't have Think or Swim, this strategy I'm sharing with you is done and available off every major broker that I've come across. What we're going to do is we're going to trigger the option to buy off the underlying stock. So we're going to be buying the option. The premium is going to be at the market price only if EQT marks at or above our trigger price, so 44.60. So we're going to manage the option trade the same way we're managing the stock trade. So this is a condition, so it's a contingent order. We're putting rules in place. We want to buy the option only if the stock breaks out. And we're going to take advantage of the breakout of the underlying stock. So that's what's going to trigger the option. You can see it down here. Submit the following order. Buy 10 contracts. Here's the expiration, $41 strike price. So submit the following order and wait until the following condition is satisfied. Mark price of the security is greater or equal to 44.60. So we're also building the contingency right here. Now I'm going to set my stop loss. So we're going to sell. We're going to leave our stop loss good till close. And we want to exit if this stock triggers this stop loss at $41.50. $41.50. Okay, I'm going to save that. Profit target, this is the exit. We're going to sell the option. We're going to leave it good till close to protect the trade. And then we're going to exit at 48.07, which is the first profit target. 48.07. So now we'll look at this summary. We're going to buy 10 contracts, 20 January expiration, 2023, $41 strike, on the condition that EQT marks at or above 44.60. We're going to sell if EQT marks at or below 41.50, that's the stop loss, and then we're also going to sell at profit if the underlying stock EQT marks at or above 48.07. So now we have the option set up to also trigger automatically for us. We don't have to wait and push the button. We found a breakout of a stock. Why not trade the option in the same manner? And the entire trade is protected. There's nothing open, unprotected, or naked to the market. I mean, so you don't have to sit here and babysit your trades. Oh, you can always rest at ease knowing that you've got your trade protected. This is freedom. And if you haven't traded in this method, many people have not, though these types of order types are there and are common and available. It allows for tons of freedom, and you don't have to sit there and fret over every position. What message was it on the bottom? Yeah, that message is on. It could happen on any trade. You know, if there's no yeah, on any limit you place, any limit trade, that risk is there on any limit, on any trade. Yep. So ultimately, when we look to how to take advantage of these types of opportunities, the breakout, the finding is the most important step, right? Making sure that we've got an ability to search down and find ideal breakout moves on the horizon, right? Is a combination of pattern and momentum. Those two together, that's how it's combined together, right? So pattern, momentum. Now, to take advantage and to look at how this works in the applicable real world, right? I showed you a live position. Okay, you don't have to sit here and wait to see how these play out. I send out trading signals throughout the week of criteria that's met, and using the same process I shared with you just now. And I'll show you a few of these here recently, and you're going to look at them and know exactly why they were signals. This is Pfizer. Okay, so Pfizer was a trade sent out to my traders on the 25th of October. Okay, so when we look to Pfizer, look to the pattern when I sent it out. Let me hide some of this analysis for you so you can see this. Okay, so this is where we were. You see this reversal? All right, see the volume? So sent out an option trade for Pfizer with all the criteria that I just walked you through here of identifying entry orders, profit targets, all that fun stuff, all laid out in a upfront signal that tells you exactly what we're going to trade, where to get in, how to set your profit targets, where to set your stop losses, and my traders simply put into their accounts and follow along, right? While they're also learning how to do this, right? So it's really a two-phase approach. It's number one, learn the momentum approach, the squeeze, which I've been teaching you today, and then also following my cherry pick trades. Okay, that's essentially what it is. So that way you've got real examples of how to pick based on the momentum, because like I said, there could be days where you'll see 70, 80 different stocks in there. Now, some of the focused areas to monitor is things like we don't buy into resistance. Okay, so there's some techniques and tricks to walk you through how to pick which one is best suited to break. But this is the exact trade that I sent out for Pfizer. And you're going to see here all of the relevant pieces of information here to follow along. So this is the actual trade sent out on the 25th. So Pfizer, here's the exact trade details. Buy the long call, select December expiration. This is the strike price to use. If you want to use a premium limit, I didn't use a limit here today, but I give a limit too. So if you want to limit the premium, I give you that price. Stock trigger to put into your account, stop loss to put in there, and then also your profit target. Okay, so everything's laid out exactly as you see it, full details, all done up front, full transparency, so you know exactly how to manage the trade. So this is a actual trade, is still live, still working. Okay, this is the latest of where we're at. Getting ready for the secondary move to come up just underneath our profit target by about $1 or so. Working order is, right? So you can see the Pfizer right here. Here's the option. There's the strike price of the signal, waiting and managing the trade, okay? So here's the, so we're sitting about 81% profit, all done automatically, right? You can see this trigger point. See the time here? This is the entry, 9:31 and 13 seconds. So set up the trade on the 25th, automatically executed 1 minute into the market, all automatically. I wasn't here smashing the keyboard at 9:30 in the morning. So trade was set up on the 25th. So trade was sent out on Tuesday. Wednesday, Pfizer hit the criteria, this underlying stock hit the price, automatically triggered, 81, almost 82% profit, all protected with a stop loss. Now, the stop loss I had up here was a new stop loss. So as the trade moves, as I mentioned earlier, I also will set up and update stop losses so that way we don't give up too much profit, right? So that's an updated stop loss that you see here. Originals down here. As the market extended, we're going to move up the stop loss to make sure that if it reverses, we don't give away any profits we've earned, right? But this is a recent trade of how the strategy applies that I just shared with you to an actual trade that's out there. Now we have sent out a lot of trades, but I wanted to show you an example of what it looks like, the level of details that go around the actual usage, because we won't know the results of EQT until at least tomorrow, right? Do we trigger or not? If we don't trigger for EQT, that simply means that the pattern has changed. It did not fulfill the breakout. Even though EQT has the recipe for a breakout, there's no absolutes. So by using this type of pending entry approach, it allows the market to come to us. We're already sitting there waiting for the break. We're waiting for it. And at this stage, if the price goes, we're already there. We're not running it down, trying to chase it. We're already sitting there catching the breakout. And if it's trading the stock, we've got our exits. If it's trading the option, we've got it all set up, and we're waiting on the condition to go. If it doesn't happen, it doesn't happen. Yeah, so I got a question on the difference between implied volatility and delta. They are two distinctly different pieces of data. The delta is the value based upon $1 of the underlying stock move, right? So right now with the 65 delta, what that means is for every dollar in price move of the underlying stock, 65 cents will go towards the premium, will be added to the premium. The delta moves based on strike prices. Okay, so how deep you're in the money. So if EQT goes like $50 and we bought a $41 strike, this delta is probably going to be 80, 90 delta, right? We're well into the money. So the more you're in the money, the more you earn per dollar move of the underlying stock. Now that's the individual definition of the delta, but you have vega, you have gamma, you have theta, right? So there's many variables that make up a premium, but that's what the delta is in its own definition. That's what it adds to the premium. Implied volatility is a measurement of the volatility, right? So the higher this number is, that means that there's a higher risk associated by the market makers. The lower that number is, the less risk from the market maker perspective. So higher risk means that you could trade it, but what they do is they increase the premium. They make you pay for it. Now, there's many strategies on leveraging implied volatility. To me, the main reason of understanding this is to know how much underlying stock movement needs to happen for you to maximize the option trade. So the higher number here, let's say this is 100%. If that was 100%, that means we would need a minimum of a 10% or higher stock price move. The reason why is because at 100% implied volatility, your premium is going to be much higher. So if 65 cents, so just think through this for a second. If this goes to $44.78, that's $1. Well, 65 will be added to the premium. Okay, well, at this point, 65 cents to $5.70 would be 10, 12%. Now, if this was a higher implied volatility, and let's say the premium was $9, well, that same $1 move would only bring 6% in profit, right? So that means you got to have a greater stock price move to make the same price move as a smaller stock price move. Okay, so I don't want to get too complex in this, but that's the difference between these two numbers. One is the value towards your premium based on a dollar stock price move. That's the delta. So by being in the money, meaning it's $41, when I buy an option, I'm buying the right to buy a stock at a price in the future, right? So $41, if I exercise my right, I'm buying in the money, right? Because it's at 43.78. So if I exercise my right, then I've got to buy 100 shares of EQT at $41. Well, that means I'm $2 in the profit. So I'm already in the money. If I come to like a $45 strike, which is out of the money, and I exercise it, I'm negative, right? Let's see. You got a question about TQ. What platform is this? This is TD Ameritrade's platform, which is the broker. This is called Thinkorswim. In the UK, my non-US clients typically use Interactive Brokers is one that I see them use, and you can use this same entry strategy with Interactive Brokers as well. So I don't know exactly in the UK, top of my head, if they're there or not, but I would look there. Yep. You're welcome on the explanation. So Accentra says, how can I do the entries you just showed while doing day trading? Yeah, so I've got lots of day traders that use this strategy. So the difference it's always catching. Okay, so if I'm on a 1 hour chart, or if I'm on a 15-minute chart, or a 5-minute chart, okay, I don't really go below 5. I look for the same types of patterns, same types of reversals, and I'm deploying the same type of entry. Okay, so when I see a high and I see the volume, then I sit there and catch. Okay, so look, when I walk through this, obviously I'm teaching it, so I'm taking more time. But I'll tell you, after about a week or two, 90% of my clients, and I have hundreds of traders in my trading room, after about a week or two, they deploy these entries in 60 seconds or less. Okay, so I'm explaining it as I'm going, so I'm taking more time. And if it's new, obviously it's going to feel like it's going to take some time. But once you have the underlying stock and you have the price points, it becomes second nature. So it's not, when I say my rule of thumb is that you want to be 5 minutes or less. But when you start off, you want to practice it. So I always recommend you set up these types of trades in a practice account, so you can get familiar with what hitting the buttons and making sure you have it set up properly, watching how it works. There's plenty of time to make money. But practice number one, I always recommend a demo account just to get familiar with the process. But ultimately, after 5 or 6 setups, you're going to have it down to be 60 seconds or less to set a trade up. The work is done here, right? Remember, all the search is done. We have our list. Now, what I look for on selection is simply free. The rule of thumb I use is I want a free runway. I want an open runway. Open runway to me means that I don't have resistance on top of me. I want at least 5% free of support or resistance, right? So you can see with Tyson, you see I have this resistance right on top of me. So I'm gonna wait. I'll wait to see if this shows up again. That's only a 1%, because if I hit resistance, it's gonna pull back. I want a free runway, open runway. Like PXD, you see we got resistance right here. We got resistance here. Now, I like PXD naturally just because of the dividend payout, but you see how this is 4%? Okay, I want to have some room to run without hitting any resistance. Second one's 9%. Okay, but every time there's resistance, you expect a pullback. Something like Ecolabs, we've got resistance here, so we've got a lot more of a runway to our first target. That's 5%. So Ecolabs would be hitting it. Okay. CF Industries, we have a high here. Okay. Next one's up here at 119. It's almost 10% move, right? So to get a support resistance level, the easiest thing to use is an indicator to help you see them. So another indicator I teach and I use is fractals. So fractals will define highs and lows for you, okay? So it's an indicator called fractals. And if you turn it on, you want to set it at 2. Whatever platform you're using may be different, but I use 2 periods. And so what the fractals do, as you can see these arrows, these are highs and lows. So lows are green. That means I've got 2 lows higher to the left, 2 lows higher to the right. So that's a fractal low, and I've got fractal high. So it's a cheat sheet for highs and lows. So that's what you use for resistances are highs. Okay, supports are lows. So if I'm above the low, then that's support. Okay. If I'm below the high, then that's resistance. So it's a nice little cheat sheet. It's a cheat sheet for you. Yep. Yeah, here's the scan settings again. This is the aggressive checklist. This is aggressive. The conservative has more criteria, but this is my aggressive one. It's a powerful scan criteria. Every day is different. The list of stocks is objective. It's purely looking at momentum, pattern. So we leverage liquidity filters, momentum filters, and pattern criteria. Once again, you can take a screenshot if you'd like, okay? Some of the other filters, I just want to curious to see what we got. Let's see, conservative, there's 28 stocks in that list for today. Let's see what the bearish side is. So aggressive bearish, there's only 4 on the aggressive bearish side. So that's the inverse of the bullish. Aggressive bullish is aggressive bearish. Conservative bearish breakouts is only 5. So you could just hear from the number of stocks that meet criteria, there's a lot more on the buy side than there is on the sell side based on today, right? The scanner I use this is TradingView, but you can these settings are found on any type of screener or scanner, that's out there. These are not proprietary to TradingView, this criteria. They are public domain type of filters. So you get the leverage of my 15 years of doing this and teaching hundreds of traders how to do this. So to give you an idea of the type of actual, data around the performance, the interesting opportunity today is that today doesn't have to be it on learning this strategy. So by understanding and having at least a level of appreciation on the type of strategy here that I've shared so far, if you're the type of person that really understands and can wrap your head around what I shared so far, then today doesn't have to be the end of this. Now, we provide an amazing program. Today, we're talking about the options profit generator, okay? And so ultimately, since August, this is the performance 2020 that we run in this specific program, okay? So over 3,500% net profit. That's winners and losers. That's what we've accumulated since August. And once again, this is the cherry pick, okay? But every single day, there's multiple different types of trading opportunities that are available, right? So these are the ones that I send out to help the journey, to help provide guidance and some of my picks to help really wrap your head around the momentum squeeze profit opportunity that I've been discussing. But for me, it's, I really don't like to work with people that just want the signals and nothing else. It just doesn't, to me, bring the full empowerment. So I really like to work with people that want to do both. At a minimum, you want to learn this process and apply it to your own trading. And then if you want to take the trades, you could take them on your own. Okay. But ultimately, it's there to really help. So want to provide a simplistic, powerful approach. So some of the questions that I receive are fairly simple, right? It's like, what do you need to follow along? Well, you need to have a trading account, number one. There's no reason to buy and join my club if you don't have an account, because our goal is to make a return on an investment, right? We're trying to make profits in the markets. We're trying to minimize losses and try to build a lasting profit strategy. If you don't know how to trade options yet, I've got education to help fill the gap for you, right? So experience, you need to have access to trade options, but these are just your level 1 access. You don't need advanced or level 2 options access in your trading accounts. You need to be able to buy calls, buy puts. I will teach covered calls. I do teach that when the opportunity is right. But ultimately, just straight access to trade calls and puts. And once again, we'll fill the gap on options experience. So for those interested in the trading signals that we send out, those get sent out between 7 o'clock and 9 o'clock, and that's done daily. So if a trade sets up, then we'll send it out between 7 p.m. and 9 p.m. Eastern. So that gives you about 12 hours to 14 hours to get the trade and to put into your account to follow along with us. So you have plenty of time to do that. It's always the night before. So the question of the bearish markets, I spent my time on the buy side because it's simple for people to understand, but the same process works on the bearish side. So when the market goes bearish, then we simply flip. Instead of shorting, we buy puts, and the same method applies. We're just buying puts instead of buying calls. Now, the big question I always get is, how is this program different? Well, number one, from the signal service perspective, everything's delivered up front. If you've been in this market and you've subscribed to any other type of signal service, then the feedback that you may have experienced and that I've received, and I've seen firsthand because I've developed and run programs like this for many, many years, is the lack of transparency and the lack of ability to really match results with what's being shown in the trading signal performance. Well, one of the issues is that they're not delivered to you up front. So I may, if I'm running a signal service and I exit my trade and then I send an email, send a text, you're an hour, 2 hours behind. Price changes a lot in an hour to 2 hours at times, right? So for me, I found that giving everything up front provides for easier transparency, right? Levels of access, so that way everyone is on the same page. If there's an update to a trade, I send it out when the market's closed. Okay, so like I showed you with Pfizer, we updated the stop losses. Any of that I do after the market's closed, so then you have the 12 to 14 hours to update your trade. All right, so everything's up front. To me, it's all about the upfront nature of the signals themselves that make it different and easier to follow along than other like services. Ultimately, I want you to be satisfied. Okay, so look at this two ways. Number one, it's the educational component, it's the analysis. So that way, when you're in the markets, you're never caught off guard. That's something I focus on heavily in my live trading sessions, is teaching analysis. So that way, you're not caught off guard. The market's a red day or green day. We walk away with, in every session, with a game plan for the upcoming few days, right? So I always talk in terms of the next few days. And so that provides level of transparency and also sets expectations. So you're never caught off guard when the market's red or green, right? So we're always anticipating the next move. And so at any point within that first 30 days of joining my club, if you're not satisfied, just send us an email and we're going to give you 100% of your money back. There's no steps to complete. There's no criteria that you have to check off the box. It's a simple relationship. I'm going to spend the first 30 days teaching how the strategy works in the real market. I'm going to be delivering trades as they check the box. And at any point after you sign up within that first 30 days, just let me know if you're not satisfied. We don't have a huge army of people here. We don't have a sales team that's on the phone that's going to call you every day. Okay, we have a streamlined support team, and we don't have a huge marketing budget that we have to raise our prices and have these multi-$1,000 price points. In fact, you're going to see how you can start for less than $400 and have an entire year of this program. So it's an options profit generator signal program plus Market Pro Live Club, which is my training and live trading sessions every week combined together. Once we have a match, I send you out email alerts, text message, and then you have access to a trade tracker to manage and monitor every single trade. Everything is laid out. This is an example of a forward trade that went out. You can see it on the left on the text message, full details. You see the email on the right, full details. Okay, everything is laid out step by step for you. Nothing to guess, everything is laid out, all at your fingertips. You get copies of the trading tickets, okay, so you can see exactly how the trading ticket's set up. So that way you can essentially just copy and paste and just check to make sure that everything's set up properly. Everything's set up that way. right? We already talked about results. I don't like to focus on profits because it sets a client that you just want everything done for you. I already showed you the results, over 3,500% net returns. I really want to focus on empowerment. So this entire program from end to end is just $399 for the entire year. I already mentioned it, but I'll say it again. In my 15 years as an executive in this space, similar programs to this we sold for $2,000, $3,000 or more. And a lot of that was due because we had to cover well over 150 employees, and 70% of the employees were in sales and marketing. We had a marketing budget, lead budget, and we had to hire a sales team. And so we had high costs to deliver these programs, let alone the software costs, let alone all the traders. But what I found is that to really be successful, we need a method of teaching. So we use GoToWebinar and other webinar platforms to teach to the masses at once, okay? And then we leverage partners like Investorexpos, where we don't have to have this enormous marketing budget. Our support team, we have virtual support, we have phone support. That's where we have the majority of our costs is around support. And so because of that, we're able to offer prices low. And the big value is that for us is our referral business. So when you're satisfied, when that point comes, people tend to talk about it, right? Talk about where that success comes from. And so that's where we rely a lot of our future growth with referrals of your friends and family members. So $399 for the entire year will get you access to the signals and also our special bonuses that I'm going to be giving away today. So with this special price, you're going to get some amazing bonuses. So this will get you an ability to follow along with me, also give you the ability to learn this strategy, learn this process, and you can also do both with your time, okay? I recommend you do both. One of the first bonuses I want to give out to you is your quick start options training. This is to get you up and running. I'm going to teach you some different tactics and techniques around options. So we already talked about buying calls. There's also buying puts, but there's also other advanced ways to pick different types of strike prices throughout the process. All right, so we're going to make sure you have what you need on the options front. We're going to break down option chains so you know how to really read them in a simple format. We're also going to show you how to set up those contingent trade orders that I showed you earlier today. The next thing is I want to set up autopilot, right? This is really dive into how to use the various order types. I shared with you a couple today, right? There's more that I'm going to teach you how to really set these trades up to manage themselves on autopilot, right? Really unlock yourself from the day-to-day mindset battle of managing P&L. One of the big benefits is I always put out checklists, right? So to me, giving away my favorite checklist allows for a consistent approach. So what happens is in my trading sessions, traders will also give me trading opportunities because they're able to see the same trades that I do, right? So we really have some amazing conversations and structure around this strategy, because once you have the objective strategy, you'll see what I see and I see what you see. So it really provides levels of clarity. So you're gonna have access to all my checklists. I update and add checklists all the time based on different types of methods that we teach in class. I'm also going to give you money management training. I talked about how to use 2 profit targets today, but there's much more and many different ways to leverage objective money management. So I'm going to give you that special bonus. And to me, the most enjoyable aspect of this program is this bonus. This is a 1-year free access with your purchase today to join the Market Pro Life Club. And this is my twice-a-week live trading session. It's all hosted on GoToWebinar. Mondays at 7 p.m. Eastern time and Thursdays at 12 p.m. Eastern time. I spend about 2 hours a session, so it's about 4 hours a week. In a year, that's over 200 hours of live trading and training support. In these sessions, we go through a breakdown of the key indicators, outlook indicators. We look at the dollar index. We'll take a deep dive into the VIX. We look at the price per barrel of oil here recently in the last 6 months because of oil and energy. We go through the big indexes like the SPY, the NASDAQ, the Russell 2000, the Diamond. So we have an expectation of the market, what we're going to see in the next couple of days. So we meet Monday night. We then reconvene on Thursday at noon. And it's basically 2.5 days is our expectation time, right? So this way we're always on top of the market. We then break down sectors. We look at areas of opportunities via sectors like energy, finance, utilities, consumer staples, consumer discretionary, and energy is something we've been hammering for the last 12 months because of the awesome volatility there. All right, but that's just an idea of what we cover. And then we go into individual trades and signals and all various levels of education depending upon what's happening in the market, right? Markets always change. So we're always on top of the market and the latest opportunities. But this is my favorite piece because I get to work with you and teach you and be your coach through the most relevant time, which is the immediate time, right? What's happening right now is where it becomes really relevant. So that's a bonus of mine that I really enjoy spending time working with you. So for everything here, it's $399 for the entire year. Okay, you're getting everything I walked you through. And to sign up, it's simple as going to this special URL. It's a short URL, so it'll redirect you. All you have to do is go to optionsoffer.com and sign up and get started. I mean, it's literally as simple as that. Optionsoffer.com is the URL. I'll drop it in the chat section so you can simply click there. So you don't have to type it if you don't want to. So optionsoffer.com, you click it. It's going to redirect you over to this page. It'll give you further details of the program. And then you simply come down to click to enroll. It'll take you to the checkout page, right? But it's similar to anything you've signed up before, online page, contact info, credit card that you want to use. And at that point, you're enrolled into the options profit generator plus all the bonuses that I shared with you. So if you want to read more, obviously there's a lot more detail on the page, but ultimately I prefer you look to this more as a combination of training, education, analysis, support, and then the bonuses, trading signals, because I just found that to really maximize this, spend a few hours with me a week and you'll be amazed at the transformation. And if you don't see a transformation, if you don't see a shift to your performance, to your mindset, if you're not able to walk away with actionable trading support, then just let me know. Just all I ask you do within the first 30 days. Spend a lot of time, as you could tell, just based on the support, the teaching, the training. If you liked what you saw today, then everything with the exception of my introduction and this new client orientation segment, right? This is the level of analysis we do every single session. Obviously, we're going to walk away with a lot more actionable intel when I don't have to worry about trying to teach from the ground floor because the empowerment toolbox is where you see all of the lessons. I've got 10.5 hours of lessons in the toolbox for you to learn how to deploy the strategy. Let's see, I got a question on the link. Let me see. Yeah, I just pulled it up. Let's use here. Let's go to the direct link. That's a short link. Let's use the long link. Here, click this link here. That was a short link. I don't know why it's not working, but here is our full link. But take it to this page here. Yeah, the optionsoffer.com is just a easy short link, but I just dropped the full link to you direct. Okay, good. Yeah, so what's fun about this program, at least for me, is your transformation of anticipating the market, avoiding the whiplash, meaning you buy and it goes against you, right? A lot of that is just symptoms of trend. Okay, it's just timing. And so the ultimate timing that you walk away with comes into the form of the pattern I showed, right? Making sure that we're focused on the point of reversal, not trying to buy and chase down a trade, right? Chasing means it's already active, right? It's an active breakout. We want to wait for that breakout to retrace and then we buy back in, right? But if you can focus your attention on the highest probable breakout, right, which is as I showed, and one or two things happen here. Some of you are just going to take what I showed you and go apply it yourself. That's fine. You have that's why I teach. That's why I show everything. I don't hide anything. So you have an opportunity to decision at your own timetable. But I challenge you, go to your charts, set your indicators as I set them up, put the volume on, and go look at breakouts. Go look at the reversal points, look down, see volume, and go, man, look at that breakout. Look at the breakout on the down move. 8 out of 10 times, you're going to see a reversal with volume, breakout, and run. And then it pulls back, then it runs, then it pulls back, then it reverses, right? It's a natural sync of the market. You're going to learn about extensions, retracements. I teach a method where I use different retracement levels than Fibonacci sequence, but it's simple. You're going to learn about not only catching breakouts, but how to anticipate the end of a trend. Okay, there's only so much time I have. I've already gone well over my normal time here today. I told you it was going to be a workshop, so hopefully I lived up to my promise of being a workshop less than a slideshow event. That's commonly done in this market, right? But I like to teach, and at a minimum, I want you to maximize the time we've spent and walk away with actionable intel. So, all right, looks like I got some questions, but as you can tell, I've got a support team here helping out. Oh, thank you, Accenture. So it looks like Kim helps. So Kim's helping moderate this event, but it's really transformative when you can pull up any chart and have a 30-second understanding of what's happening without spending hours checking charts and trying to guess or hope of the next move. And I wish I could keep going and keep teaching, but ultimately 2 hours and 15 minutes is like a water hose to some of you. So, but we have a lot of fun in our sessions. Like I said, the Market Pro Live session is interactive, highly interactive event. We've got traders in the room that have been with me for years. Some of you, when you first joined, I don't want you to feel any levels of fear of asking basic questions, or in your mind, you may think they're basic or beginner questions. I want you to fire away, because what happens is we always appreciate an opportunity to go back to basics. And so this open enrollment, I don't just have an open enrollment period where you can sign up at any time. The reason why is simple. I want to make sure that you have a like-minded and a similar start time to my new clients. So I have a bulk of people that start at the same time. So this offer, this flash sale, does end next week. Okay, so ultimately that's when this enrollment period ends, and I won't open this enrollment for probably another quarter, because I don't like to have people randomly start, because it's hard to teach and to make sure that I can address your basic setup, your basic start, right? Your first 2 weeks is really important to understand the flow of how momentum works, so that way you can maximize your time. And so having random people join is difficult. So I found that quarterly enrollment periods, so that we can really focus on applying the techniques, is a lot more powerful to empowering you to do this yourself, right? Because ultimately the level of analysis and time is 15 minutes or less. Once you get up and running, what you're going to learn is that if you spend more than 15 minutes, you're reaching, right? You're looking for a trade that is not there. You're going to be amazed at your transformation in a few weeks, how quickly you're able to determine the best trade. It doesn't take hours. It doesn't take more than 15 minutes. So after the first couple weeks, it's going to take you 15 minutes or less to identify the trade, to then make sure that the option is there if you want to trade the option, and then to set it up and you're done. And you can do it when the market's closed. So you have all evening to spend that, 15 minutes, half an hour, if you want to trade and find the opportunity, present it, set it up, and then be done. Same time, I'll be sending out signals throughout the week to help kickstart your grasp of the concepts. Yeah, so disabled veteran. Yeah, so my father served in the Air Force for almost 30 years, nearly 30 years. So I do have appreciation for veterans and active duty. So yeah, when you sign up, we'll give you an extra 6 months. So any veterans out there, let me know, and we'll add another 6 months to your 12 months for you. So that also goes for active duty and retired as well. So we do I dearly appreciate your service. First responders as well. If you're a first responder, we'll also give you an extra 6 months on us for your sacrifice and your service to us, to our great country. So just let me know if you're first responder, active duty military, or a veteran, and we'll make sure we add on that extra 6 months for you. It is my pleasure. So we've dropped the link in there. You're going to get everything I walked you through today, all the bonuses for the next 12 months. Once again, active duty and or retired military, we're going to give the extra 6 months. First responders too. Yeah, it's a good question. How many alerts per day, per week? Yeah, they're done. It all depends on the momentum, right? So it's not, I don't set trades to set a trade. I don't send trades for the sake of trading. The goal isn't to hit a number of trades. The goal is to send out profitable trades. So on average, I would say 3 a week. Some weeks could be 7. Some weeks could be 1, right? It just depends upon the volatility in the market. Now, mind you, at the most, I'm going to send out 2 in a day. But in a given day, on a volatile day, there could be 7, 8, 9, 10 ideal stocks to buy or to trade the option with. But I'm not going to bog down and send out 10. But that's the beauty of understanding and seeing what I see, because that list of 15 that I showed you today, the same 15 all of my traders see today. All of them, right? Because we look at the same criteria. We have the same filter settings. When there's days when there's 80, they see all 80. Some are going to trade the higher ticket stocks, right? The $100 stocks, $200 stocks. Some are going to trade the $10 stocks, $20 stocks, right? Because that's what they like, the volatility, and the smaller price stocks, right? But that's what the empowerment's about. I mean, there's also traders walk away with multi-leg option strategies. When you straddle, strangle, trading condors, right? A lot of that is based on pattern. And so I teach pattern, and I teach low volume, high volume spectrum trading. So there's self-developed strategies all built on the same basis that I talked about today. So it's all about how your personality trait is, what style of trading, and we'll develop that together. But what's interesting is about the base of what I shared today, the 10, 20, 50 model with volume. What I add on that in classes is a retracement model, how to determine when that retracement is going to end and then set up for the next extension, right, in an active trend, right? So there's how to trade the counter move, right, when the market's running out of steam, and how to expect a snapback, right? I teach that method too. But once again, there's only so much time I have in an event like this. So I wanted at a minimum to focus on the basis of how we view the market, and then from there we go with the flow of what the market's giving us. Yeah, the future side is the same approach I use today. The difference is obviously the method of how you trade futures, right? The buying and selling nature of futures, but the analysis is the same. It's the same method. You'll use the same method across all of your trading. So if you trade futures, if you trade Forex, if you trade cryptos, if you trade stocks, ETFs, small caps, large cap, mid caps, mega caps, you trade options, you could use the same on penny stocks. So, it's really a multi-dimensional type of approach that is built on the same basis. The only difference between markets is how you trade them, right? If you trade Forex, it's a different price that you use, right? You deal in pips, not points. Futures, you're dealing in contracts, right? So that's the difference, is just how you trade them, not necessarily how you analyze them. So the analysis is across the board. Yeah, so just understand the seasonality. I expect some action tomorrow, Wednesday. There should be some action. Usually Wednesday on this week is definitely a seasonal week every year. So usually Monday, Tuesday is low volume. Between Wednesday and Friday, you get the majority of the weekly action. So I'd anticipate some volatility tomorrow and even on a half day Friday. Let's see. What platforms, got a question. What platforms offer the lowest commission rate? I haven't looked in a while, but I would think the last I looked, it was Charles Schwab, but I've used Thinkorswim for so long now. It's got to be 8, 9, almost 10 years probably. So I'm just used to it. So, I'm not worried about an extra couple dollars here and there, but I do understand and appreciate the cost side of trading itself. That's why I don't like expensive software. That's why I try to give out free resources. So there's a ton more free resources I'll be giving out to help your trading. Once again, I want to focus on returning on our investment of our trading activity. That's why we have a low price, $3.99. Many of you trade more than that on every single trade. So for $399 for an entire year, you can see my cost base approach. I don't like a high burden of expense around education, trading. I want to keep it as bare bones minimum as possible. So that way we can let our money work for us and not worrying about paying for expensive software. I don't think it's necessary. All right, so if you're signing up, type in, signed up, or I'm signing up, just so I can keep my eye on you. I want to make sure that I can double check to make sure you're getting all the emails, you're getting all signed up in the membership area. So if you're signing up or about to sign up, just let me know, type it in that question section so we can keep our eye on you. I've got Kim here helping to moderate the event. So at this point, if there's any questions on the sign up page or any, support, what's going to happen is once you sign up, you're going to get your invoice or a receipt, and then you're going to get your login email. So you'll welcome email. You'll have access to a membership area with all the content, all the access of the toolbox, the empowerment toolbox with the videos of how to set trades up. You'll have access to the tracker, of course. You'll have access to the checklists. And then in about 15 minutes, you'll receive your GoToWebinar registration confirmation for the Market Pro Live Club. So that's all hosted in GoToWebinar. So you'll get a different registration for that via email. And then we'll remind you, this Thursday, we're not having class, it's Thanksgiving. So no Thursday class, but I recommend you watch Monday's archive session. So go to the Market Pro Live and then sign up for the, let's see, Sabio Traders Agency. Yeah, so I don't, those are the folks that started Traders Agency used to work for me in my previous job. So I work with them every now and then. Yeah, we have a long relationship. Work with those guys. Literally, we're on the same team at my former company where I was a chief revenue officer for 10 plus years. So whenever they need some extra help, then I definitely help them, but it's not a everyday thing. Yeah, so it's a company I own with a partner of mine that we've been in this industry for a very long time. I left that chief revenue job back in 2018. I have 2 small children. Now they're 8 and 9, but back then they weren't as old as they are now, of course. So, 12-hour grind as an executive. It's in my title, chief revenue. So all it was a daily grind on how do I make more money out of my clients. Well, at that point, how we made more money was creating more product, right? So there's only so many products you can create. So after that experience, I said, look, I took 6 months off, but I love teaching, I love coaching. So I said, okay, let's do something different. Let's take what I've learned and let's create a different approach. And we only have 3 programs. So it's the options profit generator. It's what's known as a rapid profit method, which is a signal service that's a different approach than the options profit generator, right? And then I have the Titan Investors Club. Titan Investors Club is about hedge fund trading. So we follow hedge fund trading activity and the big hedge funds. So that's a different program. That's it. So 3 programs and they're all distinctly different. So, and they're all around this price point. So, but that's all. And that's what I enjoy, is focusing on training and coaching, not what's the next best product to come out with. So that's a little bit of deeper background about why I'm here. But so we like to keep things optimistic, but yet balanced. Okay, so always talk about being balanced, not too pessimistic, not too optimistic. Talk about always have a level of expectation, so we're never caught off guard about red days or green days. And so that way we can better maximize our time. This 15-minute approach that I use is the same way I trade personally. So I spend the majority of my time right now in this time of the hour, time of the evenings, to trade. So I'll be looking at the market when we're done here. More than likely, I'll be sending out a signal. Some of you may already have seen it with EQT. So I got to quote which program is best. The interesting thing about the programs is that they're all based on the same momentum. The difference is the types of options, right? So the options profit generator is focused on $5 or less premiums. The average premium in this program is about $2.49. So that is better utilized by small trading accounts as well as large trading accounts, but this is primarily around smaller premium sizes. So 250 is the average per contract. So if you've got $500 per trade, then you can trade 2 contracts. If you got a smaller account, then you're going to trade 1 contract. But the other programs are all based on the same momentum. It's just different types of options. You're going to see it, the different types of trades, because the momentum or the Market Pro Live Club sessions that we host every week, right, that I host, are there so you can see every component of how we trade, right? So you're going to be able to pick up, and if you like the other types of trades, then you can add them on later. But there's no reason to worry about which one's best. I only focus on, delivering the high probable trades regardless of which one. So all great questions. All right, so at this stage, it looks like we've got, I'm just reviewing the questions, make sure I didn't miss anything, but yeah, so it looks like we got all the questions handled. So at this point, all I say is, look, if you learned one thing today, then imagine what the next 12 months is going to bring. I don't expect you to be a believer right now in this moment. So give us 30 days to earn your business the old-fashioned way, which is by proving it to you, right? And if you literally don't get it, or if it's not applicable, it's not making sense, then just let us know. Just send an email in. We're not going to call and badger you to try to save you or do anything of that nature. So just let us know via email, and we'll give you 100% of your money back. No, they're all about the same profits. They're all about the same. Yeah. All right, perfect. So at this stage, I'm going to be seeing you all next at our next Market Pro Live Club session. That's when I'll see you all live next. So keep the link. Make sure you sign up. Once again, we have lots of you that just typed in that you're the veteran. So we'll make sure that we update your account so you have that extra 6 months I promised you. So appreciate your service once again. And if you're signing up now, we appreciate it. And just keep your eye out for those welcome emails. I'll leave this room open. So if there's any questions about your login, I have Kim here to monitor the tail end. So if you have any questions on the sign up, just let us know. And we're responding to each and every one of you individually via the chat. So do appreciate the time. I went way over, I normally do, but you all are asking some great questions. So I wanted to keep making sure I was answering them for you. But hope it was a nice taste of what you're going to experience with us here at Concordia Financial Exchange. And I'm looking forward to working with you side by side. And our next session together will be Monday at 7 p.m. So we'll get you all signed up. Once again, Thursday's Thanksgiving. So happy Thanksgiving to you. First start of our holiday season. And once again, I'll see you on Monday in our Market Pro Live Club session. So appreciate it. Yeah, so it's $399 for the year. For the 6 months, you won't be billed till after the 6 months. So you'll be 18 months for $33.99, and then you just rebill thereafter. Yep. Yeah, so as long as you are active, you'll lock in the price. You know, this price will go up at the beginning of the year. So make sure you lock it in, and then as long as you're active, you'll be able to lock in that price. Yep. So you're good to go. Yep. Keep it simple. It's my mindset. And that's what I try to apply and teach to in the markets, right? So we try to keep things as simple as possible. So it's been a pleasure, and I'm gonna need to get a voice break, 2.5 hours. All right, so appreciate you all. Happy trading, and I'll see you in our next live session.